All right, so it's March 22nd, 2023, about 12, 13 days since the first SVB collapse. We had the Fed meeting today and Jerome Powell raised rates. I have the breakdown for you, but after hearing about today, I want to share with you why I think Jerome Powell is going to crash the stock market. Now, why do I have this Easter bunny looking, stuffed animal with the sombrero? Because it reminds me of Powell. It's just all over the place. This makes no sense. I don't even know why he has $20,000. Man, Chattadonia, it was absolutely crazy. We have a lot here, even while I'm wearing this shirt, man. I was talking about it today on stream. It might be time to take a vacation because the markets from here on out, after what Jerome Powell did, it is going to be very uncertain. It might be a day trader's heaven. However, the uncertainty levels and the back and forth, oh my goodness, it is going to be wild. So I got a breakdown for you. Let's not waste any time. Again, we're almost at 300,000 subscribers. So hopefully you can help me out, hit that subscribe and all of that. But what happened today was that Powell left everybody hanging. So one part about today, here's the daily chart. You notice this big drop. That was during the press conference. Some people are blaming this on Janet Yellen. Janet Yellen was before Congress at the same time, and she brought up a statement saying that they're really not looking at a overall blanket protection for all U.S. depositors, aka that they weren't looking to raise the insurance limit. And that correlated at the same time that Powell was saying, even though we're worried about banking and all of that, we would still raise rates and we are not thinking to have any rate cuts no matter what, pretty much. So I still think it's Powell, and I just think the overall uncertainty is high. But now as far as what Powell actually did, if you've been watching the other videos, it should make sense. But he raised rates by 25 basis points. That was expected and that was good. They kept the terminal at 5.1%. So again, no other surprises there. Both of those things are good, aka not factoring in any more rate hikes, nor factoring in any rate cuts and keeping the rates the same. But the big change that happened, as you see here in the statement, there is no longer the word ongoing. So I brought this up yesterday, and here is the last 12 months. So 1, 2, 3, again, look at the dates and look at what is underlined. I brought this up yesterday. It's because over the last 12 months, every Fed statement, the Fed has been saying we are looking for ongoing rate increases, ongoing rate hikes, ongoing. Today they took it out and they said some further tightening. Is that what it says? Or what was the word? They said additional policy firming may be appropriate. And even during the press conference, Powell said emphasis on some and emphasis on the words may. But like I was telling you yesterday, even leading into today, this removal of ongoing, this was huge. And people liked it at first because the whole idea is that if you're removing ongoing, then that means the next meeting will be a pause. And then after the first pause, that means you are approaching your first ever rate cut. Now, that's where it got interesting. And this is where Powell gave a whole new scenario, because despite this dovish shift, and that got people excited at first throughout the questionnaire, he was pretty much saying we are not going to be cutting rates. Even then, he said, look at the banking system. He addressed that as the first thing, but he said the SCP is showing economic activity going down, but we are not showing that rates will be going down. So that's what happened, but let me give you the basic summary. Essentially, what Powell said, and now what was based on the summary of economic projections, they didn't think that the Fed terminal rate would go lower, but the Fed did forecast a lot lower growth, or not too much more, but some drops in growth in GDP. And this is now related to the banking situation, because he's saying, hey, we think economic activity will go down. We actually think unemployment will get a little bit better. We think the banking crisis is an issue, but we think the issue from the banks will act as a tightening effect. So simply put, Powell is saying we're raising rates a little bit. We're changing the language to not say we're going to have ongoing increases, simply because we believe this banking situation could lower or tighten financial conditions and act as a pseudo rate hike. And now this wasn't good. All in all, what we got out of the whole message, it seems that price stability is still the number one mandate. Powell didn't waver by the situation. However, it seems like Powell is saying, hey, if the financial situation got a little bit more worse from here, then we would be forced to react, but we're not reacting just yet. So hopefully you're riding with me on this one, because the big problem that I have with all of this is that Powell pretty much said the banking problem is going to have a negative effect. They just don't know when, and they don't know how much. So that is why on the summary of economic projections, Powell even addressed this. He said that's why the GDP numbers are lower. So they're not ready to abandon financial or price stability just yet, but they know financial stability is right around the corner. So hopefully you see why this bothers me and why I think Powell was literally all over the place, because he gave a little bit for the bulls, a little bit from the bears, saying we're still dealing with inflation and we are going to calm down, but now there's another issue that, well, we're factoring in an effect. We just don't know when and how long and how much it's going to be. That is not good for certainty in the markets, especially after this last 3 months of recession, no landing, soft landing, and now back to banking crisis. So there's a lot going on, but now the next step and what I'm getting from today, if you watched live, this was the first thing I said, but after Powell made that big change and all of this stuff he was saying is pretty much, we are getting close to a shift, but we're not there. And now this next quarter, these next 3 months, these next data sets, the next Fed, not only is it going to be volatile, but more so, what's even worse, it is going to be pure uncertainty. So this is the next problem that I have, because now the statement and everyone's like, okay, this is a big change. Everyone's like, all right, we're going to get ready for this shift. But the problem is, this is getting ready for the shift, but the shift hasn't happened yet. And that's why I'm saying, as we move forward here, pretty much every single piece of news until we actually get to the Fed meeting of shifting, or we see the banking situation play out, or inflation do what Powell wants it to do, until then, everything is probably going to be an overreaction, because now everybody's already getting worked up in pricing and making plays for the shift, but the shift's not there. And then once the shift comes, that's when we change everything. And if you don't know what I mean by shift, I'm talking about the end of a rate hiking cycle, which has gone on for over a year. We're talking about a whole shift in stance, a shift from being worried about inflation, a shift of bond yields and people buying treasuries. That is the shift. Somebody even was talking today, a lot of people, they were like, are we going to get 50 basis points today? And I said, no way in hell. You got to let her go, bro. But one comment I made was that chances are, and especially after today's meeting, you're probably not going to watch 50 basis points ever happen for the next 10 to 15 years unless something really, really crazy goes on from here. So that's kind of the idea, is that we're waiting for this shift of a historic cycle. Today showed us we're close, but now we don't know what's going to get us there. Is it going to be the banks? Is it going to be inflation, whether it's going up or finally getting a handle on it? But the sad part is Powell doesn't know either. And he said, well, we're kind of watching for both. The scary part is that you legitimately have the Federal Reserve Chair saying that this is a problem. We expect it to lower economic activity and lead to tightening financial conditions. That is not good. Pretty much the Fed is expecting pain from the banks, but they're saying that, well, we got to see a little bit more pain for us to react. Otherwise, we're still going to react to inflation just as aggressively. They're saying if inflation goes up before the banks get worse, we're still going to raise rates. And then if the banks are bad enough to act as pseudo rate cuts and bring the economy down, then that accomplishes our goal anyways. And then we don't even need to raise rates. And then we could get on with the shift process. So this is not the best environment to be on. And that's what I was talking about today. That's why I got the vacation shirt on, because I was just saying at this point, even as I'm moving forward, I want to get ready for the shift. The actual shift is where there's going to be a lot of plays. But right now, I think this next quarter is going to be extremely uncertain. Every piece of news, good or bad, is going to be prone to an overreaction. I said it today. I am bearish after what I heard from the Fed today. That's my personal opinion. However, even if you go short today, you're not going to do that without any pain. There is going to be crazy pops. I think you could still have bullish reactions. And what I'm trying to say is that this uncertainty, the next data sets, the next update from the banks, then after things get bad and then there's 3 days of doing nothing and then people think it's all clear just for it to come back next week, it's going to create a wild environment. So what I'm looking to do is pretty much go neutral if I can until we get another update on banks or anything else. Otherwise, I would probably be leaning towards the bonds. I did add to them today, but I don't think the bonds have confirmed what we want yet, but we are getting close. Pretty much the way I'm looking at it, it seems like Powell wants the bond yields to be right where they are right now because it flows with their messaging and it allows Powell this wiggle room. And then quite simply, with what Powell said, the idea of shifting from ongoing rate hikes would be bullish for bonds, but the way he was kind of fighting back against this idea of anything, going too soon from pause to cut, he didn't really like that. And that's why I'm thinking maybe he wants bonds here. So like I'm saying, neutral, even if you go for bonds, there's a good chance the bonds even just hold these yields or this quarter basis point range for the next couple of months until we get an update. So we're going to see what happens. But overall, I mean, if I could simplify it for you, the Fed did admit the banking situation is a problem. They expect that it is going to negatively impact the economy. And if it doesn't and does not negatively impact the economy and help bring inflation down, they are going to return to raising rates. So as far as soft landing, hard landing, no landing, this is like a weird purgatory ahead of the shift. And now I think it's going to get wild. And even today with that close, you are going to get a lot of fear and uncertainty moving forward. So Chad, let me know what you think. I will see you on stream tomorrow. Thank you again for always supporting, and I hope you're ready for it. But that is your watch list. I'm trying to keep it serious for you. I don't want to go too crazy, but I hope you guys are with me. Again, all in all, just be wise. Don't get trapped on anything in the next coming weeks and months. But we're moving along around here. But 2023 is going to be historic, baby. So I'm glad you're here. But God bless you, Chad. Drink that water. Stay hydrated, healthy, all that good stuff. You know what it is. I'm out. Peace out. I'm gonna do legs today. I think. Hopefully, we'll see. This is my leg. What am I doing? Okay. See, I should have went. This is why I should have went early. You see what I'm saying? I was trying to not keep it serious. And if I just left, I wouldn't have embarrassed myself. And now you want me? Okay, I gotta go.